Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Bitcoin has risen sharply in the past couple of weeks, gaining over 25%, bringing it to near 48,000 and into positive territory for this year. This rally has driven the currency and smart contract platform sectors of the CoinDesk digital asset classification standard to gain more than 150 million for a total market cap of 1.95 trillion. Joining us to discuss more on why the recent gains are here to stay is Jodie Gunzberg, managing director at CoinDesk Indices. Jodie, it is great to have you with us live and at MarketSite for the first time. Tell us what is driving the Bitcoin rally.
The institutional adoption, the macroeconomic environment, and the possibility that Russia pulls back any attacks on Ukraine is all driving support for Bitcoin now. And what will happen is that with the inflation, the rising rates, which are really good for Bitcoin, and if the dollar weakens from any easing tensions, that's even better for Bitcoin. So all of this is forcing the institutions to look to Bitcoin, and if the Fed shrinks its balance sheet, it's particularly bad for stocks, bonds, and real estate. So again, it's really about the institutions getting in.
Why is it different this time?
It's different this time because the inflation is so hot that if it decelerates and as interest rates rise moderately, that is the best environment for Bitcoin. And again, on top of the political tensions, if the dollar starts to weaken, that gives it an even bigger boost. So we have a unique situation now, and again, it's all about these institutions starting to be able to invest more from the regulatory policy.
Speaking of institutions, we had some news earlier this month in March that Goldman became the first major bank to trade OTC, over the counter, and there's a push to increase spot trading. Of course, everyone's looking for that spot trading ETF. What are the signs that we should watch for when we think about more institutional adoption?
When we watch the institutional behavior, we're really looking for uncorrelated assets. We're looking for greater liquidity. We're looking for more product coming to the market, which we're seeing. And we're also looking for the ability of innovative assets like Bitcoin and Ether to serve as store of values and many other of the asset class functions, like as capital assets or commodities, so that pensions with long liabilities can use these assets as not only a diversifier, but a chance for high returns.
And when we think about the growth in new products, where are you seeing the most crypto demand?
We're seeing most of the demand still in Bitcoin because it has the longest history and investors are really comfortable with that. But we're looking for even more diversification into smart contract platforms with innovations that allow a single asset to serve, again, as a capital asset, a commodity, and a store of value all in one. So that's a really unique quality in an asset that we haven't seen before.
All right, Jodie, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.